Welcome to the Capital News. I am your host, Alex Karitis. Today is March 3rd, 2019. Hope you're all doing well. Thanks for joining me today. I know I missed you guys on Friday. I was out of town, but I wanted to touch up because there were some interesting moves in the market on Friday and some interesting economic news a little bit over the weekend, and I'm going to get into that right now. So on Friday, we had the S&P, which was up 19 points. The Dow was up 110. NASDAQ was up 63. The Russell 2000, the small cap index, was up 14. So we had quite the rally on Friday, despite having some not so great news that I'll get to here shortly. But making my way through some of these other markets, oil was down 2%, closed around $56 a barrel. Gold simply just got decimated from its recent rally here. It was down 1.4% and settled around $1,298 an ounce. Just a complete reversal of its nice little rally. Is that a correction, or is that something bigger on the horizon coming? We're going to have to keep an eye on that as we make our way through this week and next week. Silver was also down 2.3% and settled at about $15.28 an ounce. So this was quite the reversal, is what we've seen over the past couple of weeks, where gold and silver were rallying. Oil, despite the tweets from the president, was sort of balking and it was continuing higher on the cuts from OPEC and Russia. But we had quite the reversal on Friday. The 10-year Treasury bond continues to sell off, and now this interest rate is now at 2.76% on that yield. So our interest rates, are they going to make a slow and steady incline here? Because that's been the recent trend. There's been selling in the bond market, which would typically mean that that money's going out of the bond market, and is it going into riskier assets? Well, Friday, those markets would suggest yes. We got the Dow up over 100. NASDAQ was up 63. I mean, these are not small moves. These are big moves. These are big moves. So we're definitely going to keep an eye on it. And this is in regards to everything that we've been discussing on this program last week. There has not been any great economic news out of it. Yeah, we had a fourth quarter GDP number that beat estimates, but we've had further guidance that is to the downside. Not good. We've had sentiment not good, not in the right direction. But, again, everything's fine, is what we're told by our dear and trusted leaders. Just trust the government. Everything will work out just fine, like it always does. Now, what was some of the news that came out Friday that sort of just, the markets, they didn't really care? We had the ISM Manufacturing Index, which hit its lowest level since November of 2016. So the ISM Manufacturing Index slipped to 54.2 in February from 56.6 in January. Okay, economists were expecting a reading of 55.5, so it was worse than expectations. A decline in new orders, production, and employment and prices all contributed to the broader index's decline. Now, this number is still above 50. That's the halfway mark between contraction and expansion. It's still north of 50, so that is a good thing, but it is decreasing. Okay? Markets didn't care. Markets did not care. Why? Because U.S.-China trade talks continue. Everything's going to be great. Larry Kudlow was out again. It's just a continuation of what he had already said. That's all. We've made fantastic progress. This is going to be a remarkable, historic deal. Period. End of story. What are the details, Mr. Kudlow? It's a fantastic, remarkable, historic deal. We don't know. We don't know. When are we going to know? Well, there's more headlines. And I know we were sort of maybe anticipating a meeting between President Trump and President Xi mid-March down in Mar-a-Lago. No, it doesn't look like that's going to happen. Most recent articles now state that that's probably going to be towards the end of the month, probably around March 27th. So we got a lot of stuff taking place in March. We have a Federal Reserve meeting. What's going to happen with interest rates? Are they going to be in wait-and-see mode? Are they going to cut rates? Are they going to do a surprise and increase one more time because, well, the markets came back, everything seems to be okay. Let's just sneak one in there and then we'll say we're done from here, and that'll really give transparency because now we'll just say we're done and that's it. That's going to keep inflation in check. We're just done. We're just done. Now, do I anticipate that's going to happen? No, I don't anticipate that's going to happen. We would suggest, from everything that they've said, that they're just going to continue with their wait and see approach. Unless there is some devastating information or some fantastic information that says, well, we can raise them or we can cut them. Now, the fantastic news is obviously the U.S.-China trade deal, but that's not until the end of the month till that thing gets signed and the presidents meet and have their signing ceremony. So the Federal Reserve meets before then. So unless they just simply take President Trump and Larry Kudlow at their word that this is going to be such a great and fantastic deal, then are they going to raise them? I don't know. I doubt it. I doubt they're just going to take their word for it. So they're going to do a wait and see. Wait and see. I said on a previous podcast, March could truly be March Madness. Forget about your basketball brackets. Pay attention to the real news because this could be more exciting than any basketball game. Okay? I'm just telling you, this is going to be a very interesting month. Again, we have the Fed. They're going to make a decision. We have President Trump and President Xi are supposed to meet. We're going to have a Brexit vote of some sort in a couple weeks. We are going to have, and depending on what happens in that vote, is there going to be an extension to Brexit? Because recall, the deadline is March 29th. So, what's going to happen? I mean, everybody, it just seems to me like this is all orchestrated in some way. I don't want to sound paranoid or conspiratorial, but it's just amazing how all of these dates just sort of overlap everything. All of this macroeconomic news, and it's global. It's global. Brexit is a global news story. U.S.-China trade talks is a global news story. That could be taking place March 27th. Then you got a Brexit deadline of March 29th. Maybe it gets extended. It gets kicked down the road. How much longer? Is it going to interfere with the EU Parliament elections in the spring? I don't know. Do you know? Nobody knows. Just kick the can further down the road. Headline driven. Let's give some bad news, but nobody gives a damn. Just keep buying these markets. Up, up, up they go. Remember, that's what President Trump tweeted a week or two ago. Up, up, up. I don't know. Is he pulling some strings? What's going on? Maybe that needs to be investigated. Maybe it does. I'm not for anybody pulling the strings. It's supposed to be a free market. You and me and 6 or 7 other billion people around the world are supposed to determine prices in the direction of markets. Not the president, not a dictator, not a prime minister, not a chairman of the Federal Reserve or any central bank. You and me. You and me are supposed to do it. There's not supposed to be any fiddling and pulling some strings behind the scenes to get markets to go in one way or the other. Not supposed to happen that way. Not supposed to happen. So I don't like it when I get tweets or statements from people, the president, chairman of the Federal Reserve, or some other central bank that says, well, we're going to do this because we don't like how the markets are behaving. That's not your job. That's not your job. Read the Constitution, read your charters. Get out of the business of propping up markets. Do your job. Now, there was other negative news last week. Good information coming out of Toll Brothers, if you recall. Home builder. Not so good in the high-end real estate market, at least not in California. Markets don't care. Don't care. Just going to keep going up on trade hopes. Is this buy the rumor, sell the fact? We're going to find out, I guess, in March 27th, but we've just dragged this out again another few weeks. So if this continues to happen and markets continue to rally on these trade talks, we're going to make new highs. If they continue to rally, there's not going to be any doubt about it because we're not that far away at this point. I've discussed here many times that we're at technical levels. Will the stock markets pull back? They've been consolidating around that range. Some of them have been up around their 200-day moving average, have closed above it. That's typically a bullish sign. But there's other levels right around there that could say, well, it's going to reverse, it's going to act as resistance. Will it? I don't know. It hasn't. It really hasn't yet. I mean, we could break through that. Again, just off of headlines. We don't have any details. We just have adjectives. Fantastic, remarkable, historic. That's all we have. We don't have facts. And when markets aren't interested in facts, we have a disconnect. And that becomes scary if you're an investor. If you're a trader, maybe you like the volatility, but volatility hasn't really been that crazy. I mean, we've gone 10 straight weeks of weekly gains, at least on the Dow. I know some of the other markets are a little bit different, but you're still talking 8, 9, 10 straight weeks of weekly gains on these markets. It's a V-shaped recovery. There really is no end in sight. I mean, March 27th, again, maybe that'll finally do it. Maybe it won't, because there are talks, at least in some of these negotiations, that not all of the tariffs on our end will be removed. It's sort of the carrot and the stick. Because, yeah, China might say they're going to do something, but we want to see the action. And that was something I've mentioned multiple times here before. China can say whatever the hell they want. Are they going to do it? That's the real question. So that's another way to drag this thing out for a little bit longer. We'll keep 10% on of maybe $100 billion, and then if you do this, maybe we'll lower it to 5%, or maybe it'll just be $50 billion of goods. They could do it a number of ways to drag this thing out for another few months, whatever they come to an agreement on. That's speculation. I don't know what they're going to end up doing, but there are articles, there are reports that is at least the case in the short term, where the U.S. would want to keep on some of those tariffs as sort of, the old carrot and stick method of getting things done, just to make sure that the Chinese are actually following through with what they said. I don't know. We're going to find out. March Madness. More news coming. The other thing that we have over the weekend, we had some other economic data come out from some of the Asian markets. We had Taiwan. Their PMI, Purchasing Managers Index, is down to 46.3 in February, which is down from January's number of 47.5. Again, it's below 50, so this is contraction, not expansion. It is contraction. This rate is falling at the fastest rate in 3 years. Exports fell at the fastest pace since 2011. Fastest pace since 2011 on the exports. Not good information. Not good news. What are the Asian markets doing today? Because it is Sunday. They are open. It's Monday there in the Asian markets. That's when I'm doing this podcast. I will get to that in a second, because there was more. We had South Korean Purchasing Managers Index down to 47.2 in February, which was down from January's number of 48.3. That's the fourth straight monthly decline. Export sales fell the most in 5.5 years. 5.5 years. So we have Taiwanese exports falling at their greatest pace since 2011, and we got South Korean export sales fell to the most in 5.5 years. Well, what do you think's happening in the Asian markets right now as I speak during this podcast? Well, they're up, of course. They're up. And are they up just a little bit? No, hell no. No, they're not just up a couple points. They're up a few hundred points. Well, of course, by the time this podcast is over, that could change. They could be up even further. Or maybe they'll correct and come down a little bit. I don't know. But that's what this is all based off of. That's what this is. U.S.-China trade talks. Let's not worry about the fundamentals. Let's not worry about what's actually taking place in countries around the world. You know that 20% sell-off in the fourth quarter of 2018? It's all concerned with this stuff. Well, now it's coming true, and the markets rally. Well, we don't care. Chairman Powell came out and said we're going to do a wait and see. President Trump tweeted buy the dips. President Trump sent Secretary Mnuchin to the plunge protection team, the largest banks in the United States, just to say everything's okay. Buy the dips. And we've been on a V-shaped recovery ever since. U.S.-China trade talks. For 3 months, as we've been hearing, these are going to be they're going fantastically. This is going to be great. We have no details. We have no facts. We have no handshake. We have no signature. We have no signing ceremony. We have nothing. We have headlines. This is what's moving the market. It's a total disconnect. Total disconnect. If you're in these markets, you better be nimble and you better know what you're doing, or you better have a stomach for the potential volatility that I think is going to eventually come. I do. I just don't know how we can continue to defy these economic laws of gravity, basically. I just don't know how we can continue on with this. I want fair value. You know, a lot of times people say, well, the markets were up, it was a good day. I don't look at it that way. It's a good day when the markets find fair value. It's a good day when they're not being manipulated by central bank chairmen and members and by presidents and prime ministers. That's a good day. When you and me are finding what price stocks, bonds, and everything should settle at, that's a good day. If it's up, it's up. If it's down, it's down. I'm interested in the truth. I'm not interested in having an inflated portfolio because people are pulling the strings behind the scenes. It just doesn't make any sense. I mean, if you want to live in that type of world, well, I guess we're here. You know, we were just told this will never be a socialist nation. Yet here we go. We have a president who is saying, buy the dips. Buy, buy, buy. Send your Treasury Secretary to meet with the top banks to say everything's okay. And nobody cares, nobody questions it because everybody wants to buy something and have its price go up. Not because the company is fantastic, not because they're making revenues or profits, hand over fist, that they're controlling their costs, doing all of these good things. No, just because. Just because. If that's what you want, that's fine. You're allowed to. But just don't be surprised when it comes the other way in a tsunami of a collapse, which I think is going to happen. I just can't time it. You can't have this type of situation. You can't have these types of debt levels. You can't have these types of facts coming out from around the world pointing to a global slowdown, and then you have stock markets that just continue to rally simply because central banks around the world are printing money. I read that article to you guys last week as far as what the Swiss National Bank and the Bank of Japan are doing. I mean, they're buying shares and ETFs outright to the tunes of billions of dollars. But who cares? They don't even care. They don't even care. Well, at least the Bank of Japan doesn't care if they lose money. They're just going to continue to buy them. They're just going to continue to buy Japanese ETFs and whatever the hell they want, whether or not they make profits on them. Regardless, doesn't make a difference. We're just going to continue to prop up these markets. Well, they're doing a fantastic job today. I mean, so far they're up 1%, 200 plus points. 200 plus points today. Despite the fact that their neighbors, the Taiwanese and the South Koreans, just reported some negative economic data. Don't worry about it. We have a fantastic deal coming. Now, one other thing I want to follow up on is in regards to Chairman Powell of the Federal Reserve. Again, I did cover this previously last week in regards to his testimony in front of the Senate Banking Committee. But one thing that I didn't have time to get to with you guys was in regards to some question and answers where he finally spoke some truth in saying that the fiscal situation of the United States is unsustainable. It's unsustainable. We know this. I tell you guys this every day. And I know you know that. And if you don't, educate yourself. Pay attention to what I'm saying. But don't just take my word for it. Do your own research. And tell people who have no idea what's going on to watch and listen to this podcast. Because you have to become an informed citizen so you can make the right decision on knowing how and who to vote for. And how to protect yourself financially. To be aware. At least know what's coming. At least be prepared in some form or another. So we have this conversation in Congress, Senate Banking Committee, and he says the fiscal situation of the United States is unsustainable. Well, what's your solution? He doesn't have one. Whole bunch of questions. Well, I don't deal with trade. Trade isn't our thing. You got to deal with trade. Talk to the president about trade. It's no solutions. You can't ask these guys for their opinion. They want to walk this fine line as if they're independent and don't want to step on anybody's toes. They couldn't care less. They just are in damage control and don't want to put their foots in their mouths anymore. So there's no answers other than to say it's just unsustainable. We have no policy solutions. That's not our job. It's not our job. We can't do anything about that. Any advice? You're supposed to be an expert. You got several hundred economists. You don't have anything? Nothing? No ideas? Just to say it's unsustainable? Well, why is it unsustainable? It's unsustainable because you guys, you idiots at the Federal Reserve have embarked on the most insane economic policy experiment in the history of man. Zero interest rate policy, quantitative easing, monetizing the debt. That's why our fiscal situation is unsustainable. They could keep them in check. They really could. If the Federal Reserve wanted to put the brakes on the government, they could do it like that. Nothing. Snap of a finger, blink of the eye. They could, because he could go up there, the chairman could go up there to Congress in a public setting or in private meetings in their offices and say, look, listen, this is unsustainable. And we, the Federal Reserve, are not going to be a buyer of these treasury bonds. We're not going to do it. So what does that mean? Well, that means unless Uncle Sam can find a whole bunch of buyers in the market, he's going to have to pay a lot more in interest. And if that doesn't wake up Congress, I don't know what will. I don't know what will, barring some other 08-09 financial crisis for them to get their act together. But by that time, it's going to be too late. It probably already is too late, but at least he could have said, well, you can stop these trillion-dollar deficits that you run up in good times. We're told we have great times. It's fantastic. It's an economic miracle. Yet we have trillion-dollar plus deficits with near record low interest rates. 2.5%. Give me a break. Give me a break. You don't have to be an economist to know this stuff. He can't get up there and have the nerve to say, even as an American, he is an American citizen. Just remove yourself from it. Give some policy advice. Give some suggestions. Because clearly Congress doesn't know what the hell they're doing. Maybe you, Chairman Powell, and the several hundred economists you have, do know what you're talking about. Of course, that's not the case. But that would be an easy one. And I discussed this at length in my book, The Cynic's Guide to Investing, on how the federal government and the Federal Reserve are joined at the hip. They're facilitators. They facilitate each other. Congress is just like the stock market. They're a bunch of crackheads. They want that stuff just as much as the stock market does. Believe you me. I mean, don't pretend. And here's the other thing, especially for the liberals out there who might be listening, don't pretend for a second that AOC and Crazy Bernie and Pocahontas and Kamala and Spartacus, that they want to rein in the central bank. They couldn't. They couldn't rein in the central bank if they tried. They need them for all of the insane products and policies they want to ram down our throats. The Green New Deal, Medicare for all, free education, free child care, everything. There isn't enough taxes to be had to sustain that for any significant period at all. You'd be surprised I would be surprised if that could be sustained just on taxes alone for 1 year. For 1 year. If you taxed a hell of a lot more people, a hell of a lot higher of a rate. They don't understand the math. The only way that stuff could be paid for is by monetizing the debt and printing money. Of course, they don't care. They think that that's fine. Just print money and, you can just grow that's how you create wealth. print money. Well, then Venezuela would be more successful than the United States. Argentina would be more successful than the United States. Zimbabwe would be more successful than the United States. Japan wouldn't be a zombie economy. They'd be swimming in wealth. Instead, they're swimming in junk. I mean, I can't make this stuff up. It is a sad, pathetic day that we have to deal with this type of stuff. We finally acknowledge a problem. The fiscal situation's unsustainable. What can we do about it? I don't know. I don't know. You got me there. I have no idea. We only control interest rates, and we can make a decision to buy a whole bunch of bonds to keep interest rates low so you can continue on with this insanity. Or we can stop that. Oh, I don't know what to do. I can't think of anything. But I'll keep you updated. It's a joke. Wish I wasn't joking around. This is reality. This is 2019. This is the United States of America. Thanks for joining me today, everybody. It's been a pleasure having you. Please like, share, subscribe, get the word out, leave your comments. I would love to hear from you. This is the Capital News. I am Alex Karitis. Godspeed.